Welcome to the Stage Analysis Members Weekend video. So it's been a week or so since I did the last video, as I was away for a week. First time I went abroad since before COVID, so it's nice to have a break from the markets, get a little bit of sun. But back to reality now, getting back to normal, back to our normal programming. So which in the Stage Analysis Member Services is 2 videos a week. Do a midweek video and a weekend video. The aim of obviously covering off what's going on with regards to Stan Weinstein's stage analysis method. So looking at the market breadth to determine the weight of evidence using the indexes, industry groups, sectors, and obviously looking at individual stocks as well, just generally getting a broad picture of what's going on and following from the top-down approach that we use in Stan Weinstein's method, as well as the Wyckoff method for deconstructing the various base structures, starting to decipher the price and volume action. So today I'm going to cover, this is a preview of the video post at the moment. It's not, obviously I haven't got the timings yet, so we haven't recorded the video as yet. So I haven't included the end bit on that, which will be a quick look at what's going on with Bitcoin and Ethereum at the end as well. But starting off, I'm going to have a look at the major indexes tonight. Looking at the S&P 500, Nasdaq Composite, Russell 2000, as well as a few of the major commodity charts. I haven't put them in there yet as well. So US Treasuries, 7 to 10 year Treasuries, the stage 4 breakdown in copper a few weeks back, which I highlighted at the time, and then also whether the oil was in stage 3 or not. So have a look at that. Then the members only content, we'll get into the sector breadth. I posted that yesterday, and have a talk through that and the previous comparison from back in May, as the oil group has finally started to come off the top now, which has brought down the overall average, as well as the Investors Business Daily industry group spell curve, which uses the Bullish Percent index for each of the 200 individual groups to look at that. So as well as industry group relative strength rankings, and then the market breadth update. Go through that to determine the weight of evidence before finally getting into the watchlist stocks with some live markups, and have a look at various levels on the long and short side of some of those. Some are developing. I look for base structures to be developing, obviously, as they potentially approach entry points, but a lot of them at the moment, as we're still in stage 4, continue to be quite early in base structures. But a lot of the watchlist stocks at the moment, since the June low, have been IPO type stocks in the software group. So an interesting one there. So I'm going to have a look through those and see what's been going on nearer the end of the video. Right, let's go back to the start. Let's get stuck in. So starting off tonight, we're going to have a look at the S&P 500. This is where I normally like to begin, sort of our broad measure that we look at and compare all other stocks to, as well as other asset classes. Gives us kind of a universal baseline for the Mansfield relative strength indicator that we use for the relative strength. So in whatever we're comparing against, it's a great sort of way to quickly look at a chart and then see how the relative strength is performing. As you can then, it gives you a really good idea, as everything is versus the S&P 500, whatever country you're in, wherever you are. You can then obviously break that down into individual relative strength charts as well versus other things. So if you're doing a gold stock, you can do it first versus the S&P 500, but you also probably want to do it versus gold, spot gold itself, or continuous futures. Same as with cryptocurrencies. If you're looking at those, you can do it versus the S&P 500 first, but then also compare it to Bitcoin or Ethereum, as they're obviously the 2 major crypto coins to compare against, etc. So let's get back onto this. So the S&P 500 here, this week, pulled. It was a negative week overall. We did see a potential higher low attempting to develop on Friday. There was some little bit of strength on Friday. We can see the percentage of stocks at the bottom of the chart here, which is the percentage of stocks above their 20-day exponential moving averages, has moved up to 42.4% here, which is here. So we've got 42.4%. You can see it's attempting to make a higher low since the June low. So in June low, back down in here, this was the lowest level this has got down to since the March 2020 stage 4 decline, basically. So at the moment, around 40% above where it was 2 weeks ago. So about more than a third of stocks are actually back above their 20-day exponential moving averages. But you can see the S&P 500 here. This is the 21-day exponential moving average on the chart here that I use. So very similar. There's not much difference between them, to be fair. So I use that as it's used in the CanSlim method, and I like to have it on the chart to see what traders of other methods are using on the daily charts. So we use the weekly chart for the stage analysis method in general. So I used on the daily chart I just used the 200-day, the 50-day, and the 21-day exponential moving average here, and the 50-day and the 200-day as simple moving averages. So they give a good proxy of what other methods are looking at and what other people are looking at. So I find that the best way. So at the moment, attempting to make a higher low, potentially very raggedy base structure going on here. It's still making lower highs and lower lows. So if this can actually pull through, make a break back through the 21-day moving average here and start to move up through this near-term level, this 3950 level, you can see we've got a lot of near-term resistance from these gap down moves. We've only filled one of the gaps so far, so potentially need to attempt to fill this gap as well, which would take it back up to the 50-day moving average up here. So looking for that, which potentially could then turn this into a broader base structure, although it would be a declining base structure. So at the moment, we remain in stage 4 in downtrend on the weekly, but it has been going sideways to a certain degree for the last month, although obviously, like I said, lower highs and lower lows still. So we're still in a stage 4 downtrend, make no mistake of that, and hence, obviously, it is a difficult environment to operate in. Nasdaq 1 composite, similar kind of moves, a little bit near-term relative strength we've seen since end of May here, but same sort of price structure. As you can see, it's making a attempt at a base structure here, but it hasn't yet obviously started to move back up and making higher highs. So you'd want to see it start to break back through this level in here and start to move back up into the upper part of the range here in order for this to potentially be a base structure. At the moment, as I said, still making lower highs, lower lows. So not quite a base yet, but potentially this could develop into a base. So if we look at the Nasdaq 100 on a lower time frame, so this is the 2-hour time frame here. So you can see this is using the QQQ. So you can see what I was talking about in terms of that there's a potential base structure forming, but it is a little bit raggedy at the moment. We've had this could be a potential terminal shakeout move and then a last point of support forming, but it could quite easily roll over and just make a continuation breakdown lower. So, but it has pretty much gone sideways for the last month since middle of May here. It's in very similar position. So although it's obviously had moves up and down in and out of the base, it is potentially forming a base structure here. So if this can form up, we can suddenly get a move back up here, sign of strength, back out of the range, this kind of thing, then that would then obviously form into a base, and this would be phase C into phase D of the base structure. As I said, could quite easily just roll over here. We could quite easily just do this and be off to the downside again with a stage 4 continuation breakdown. So not taking anything for granted here at the moment. Russell 2000, same kind of thing. It has attempting to make a higher low, hasn't yet obviously made a higher high within this potential redistribution base that it's forming at the moment. A little bit of a head and shoulders pattern within the base at the moment with a lower high here. So still showing relative weakness at the moment. So we need to see this start to come back up through this near-term level in here and a bit back above this 50-day moving average and start to form up. And potentially then it could start forming into a broader base structure. But at the moment, relative strength versus the S&P 500 here still underperforming the zero line. So S&P 500 still outperforming overall since it began its downtrend into stage 3, into stage 4 back in November here. So it didn't break down into stage 4 until in January, but go out to the weekly chart on this quickly, you can see the depth of this stage 4 decline now. It's stair-stepping its way down since the stage 3 up here. So just forming structures on the way down, little dips above and below, but just stair-stepping its way down. All right, let's go back. Right, next up, let's have a look at the weekly charts of these quickly before I move on to the commodity charts. So you can see the stage 4, which began for the S&P 500 not too long ago, about 6-7 weeks ago. There, as it started to break down more convincingly, it had an initial attempt back in February, but then reverted back up and started to form this broader stage 3 range, which you can see up here, but then double top and then fell over once more, started to move back down again. So a little bit of an up thrust within the broader stage 3 structure. You can see obviously that then formed a much larger stage 3 structure. Although, as I've talked about before, you don't know you're in stage 3 until you get that change of behavior. So at this point here was when you started to know that you were in stage 3. But prior to that, obviously within the bigger stage 2 advance, you still couldn't see that this was stage 3 at that point, but then it does then become part of the broader stage 3 structure overall, as all of this is now obviously part of that head and shoulders top pattern that formed. But when you look at that in a textbook and they show you a head and shoulders pattern forming, obviously until this point here, until you've got to around here, you're still in stage 2. You're just in late stage 2, and you don't know that you're yet in stage 3 yet. But you do start to see with an index like this, obviously lots of stocks have already broken down by that point, but if you start to see this in the individual stock, then that's obviously a point that you start to recognize that you're moving into early stage 3, and that any kind of rally attempt next that you should be obviously looking at more seriously, as it could then roll over and drop off into stage 4, like we saw here. The S&P 500, obviously NYSC continuing lower in stage 4 at the moment. Another down week, although more of a consolidation, but still below declining 10-week moving average. Relative strength been outperforming since April time in the NYSC. Nasdaq Composite continuing to a deep stage 4 decline at the moment, another 4% off this week, still below that decline in 10-week moving average. So need to see it start to move back above that and start to hold and build itself out again in order to get more bullish again. But at the moment, as I said, potentially could be forming the initial structure or base, but could quite easily be a redistribution and could just fall over and move down to the downside again. So NDX, similar sort of thing. We had an acceleration with short-term selling climax. It did then go on to make a lower low once more. So it's broken to the lower part of this channel. So showing quite a lot of weakness there at the moment, but attempting to hold up a little bit with a little bit of demand tail there, but still another 4% down week, remains in a deep stage 4 decline. Dow Industrials a little bit stronger, only down 1% this week, consolidating near the top of the bar from the previous week, but still under that declining 10-week moving average. Small caps, this used the Russell 2000 for this, again underneath that declining 10-week moving average and in second base structure of stage 4 at the moment. So as I said, it might not be a base structure yet. It may just be a continuation move down, but obviously we've got stair-stepping our way down in stage 4, so potentially base 2 of stage 4. If it can turn around here, we can start to get back up above some near-term levels there through this 190, back up towards the 30-week moving average here, and then start to get back above that and hold, then potentially could get interesting again on the long side. But at the moment, everything remains in stage 4. So just looking for areas of relative strength and where the bases are forming, which is few and far between. As I said, I'm going to go through those later on in the watchlist stocks for the members, but there's been the vast majority of watchlist stocks over the last few weeks or so since the June low have been coming from IPO type stocks in the software group. The software group's a big group, but there's almost 400 stocks in it, but there's not that many of the IPO type that in there, and they're with not too much overhead resistance. There's quite a lot of stocks from the software group that have had deep declines. So you've got these massive moves like this that have come down and are attempting to make short-term bases, but they've given up their entire stage 2 advance. So this is a big no-no. We do not want these kind of ones. We want ones that had big stage 2 advances, small stage 3 topping, and then pulled down and then starting to base, and might be might be forming up and then could go on and start to move back to new highs again. So the decline needs to be less than half of the previous stage 2 advance. Ideally, you don't want to see a decline that gives up the entire prior stage 2 advance. So some of those more recent IPO stocks, as they are more recent, they don't have that overhead resistance to deal with. So even though some of those have come off a long way, they won't have as much overhead to deal with as some of the ones that have had massive stage 2 advances during the 2020 rally. So let's move on to the commodities here. So this is light crude oil continuous contract. So I highlighted a while ago that it was moving into potential stage 3. We've talked about it on multiple videos. So we had a little bit of an up thrust move a few weeks back here. So this was another change of behavior of a significant reversal bar once more. You see the individual energy stocks got destroyed at that point, but they did start. We started to get early warning signs in early May around this kind of area in the individual stocks. There was lots of buying climax moves in the oil groups. So that came up in a lot of the watch list scans each night, and I talked about that quite a lot, really. So over the course of May, we see that this is potentially forming into, it could be early stage 3, but we still got this strongly rising 30-week moving average. It is below, and it's been holding below the 10-week moving average here. You've got another squat as it attempted to move back through again this week, and it can't overcome this near-term bar. So this near-term bar now is a major area of resistance. We already had big resistance from the prior top area here. So if it starts to move lower back through here, then it could start to get more hairy and fall off into a deeper stage 3, and we could obviously break down into stage 4. But as I said, the one caveat with this at the moment is we've still got this strongly rising 30-week moving average. So it could, on the outside chance, still be stage 2B. It could just be late in stage 2, and we could yet see higher highs. However, obviously, this is a big volatile pattern. So this is certainly a change of behavior. So we've marked that as a buying climax, an automatic reaction, secondary test. So we've clearly got a Wyckoff base structure developing here. So potentially got the start of stage 3. One trick that you can use in stock charts, don't know about other charting services, you can do it. You can just stick a minus figure in front of the chart and it will invert the chart for you. So as you can see here, if you look at it from the inverse, a lot of people struggle with looking at charts from the short side versus the long side if they're only looking for long. So if you invert the chart, you can just look at it as a long. You can then potentially see, is this in stage 4 or is this in stage 1? So at the moment, this would still technically be in stage 4, although as the same with the top pattern there, it's potentially moving into a stage 1 base here, but it hasn't yet had a move back above this 30-week moving average and hasn't started to consolidate above that yet. So this might well be forming a base structure that could turn into stage 1, and it could just be a double bottom here and immediately move back out again. You don't always get a well-developed base structure, especially with stocks that go parabolic, have climactic type moves. You can get obviously that V type bottom or W bottom type move, so you don't necessarily get the entire base structure develop. But at the moment, when we're looking for a stage 1 base, when you've had such a strong move like this was obviously the entire stage 2 advance flipped, so it looks like a massive stage 4 decline, then you're going to have a lot of overhead resistance to work through of this. So you would expect obviously a bigger base structure to develop. But yeah, that's a little trick that you can do to flip the chart and look at it from a different perspective. So let me go on to the next. So copper broke down 3 weeks ago into stage 4. Highlighted it at the time. I've been talking about the top in this for a while, since this is using the Wyckoff method, a UTAD. So it's an up thrust after distribution. So when you have a failed stage 2 breakout attempt to new highs and it quickly reverses back in again, then you get a significant bar here. So that is when you can see it's potentially an up thrust. It's the opposite to a spring, so where you get a move underneath the bottom of the base at the low and then it quickly moves back to the upside, and then we had a higher low test here which then rolled over. So you got your up thrust and a lower high test, and then last point of supply here. So continued to break down after rolling at the 30-week moving average here with again a little little squat at the 30-week moving average there before rolling over once more and then breaking down more significantly here into stage 4. So from a Wyckoff perspective, you've got obviously short entry points throughout this area here. And then on the stage analysis, you're looking for a stage 4 breakdown here, and then potentially the secondary entry point would be back up in this kind of area here. If it gets a move back up towards the top of the range, you can sometimes, obviously not, you don't have to necessarily have a horizontal breakdown for stage 4 always. Some people would have taken this as a potentially the stage 4 breakdown area, but then there's a lot of support underneath, which can then obviously form as, if you're shorting, can form as near-term resistance there. So you would expect to move back up. And then the failure point here, the secondary point, is also a potential entry area there as it fails and rolls back over again. So this has obviously had a really strong Wyckoff type structure with a buying climax, automatic reaction, secondary test with an upthrust after distribution test, and last point of supply. So this has got the full structure. I recommend you study the distribution structure and the accumulation structures from the Wyckoff method. You can find them in the stage analysis forum, in the resources thread, so as well as on other sites, Wyckoff Analytics, on stockcharts.com, etc. So it gives you a really good picture of what's going on with the price and volume action within a base structure and what to look for. All right, next up, another one of interest this week in terms of the commodities, or it's not a commodity, it's the treasuries, but this is the IEF, which is the 7 to 10 year treasury bond. So I tracked this one as well. It's been in stage 4 for quite a while, had an initial move back up into stage 1 back in 2021, where it was attempting to base, but it couldn't manage to break back above that stage 4 breakdown level. So even though it had a long period back above that 30-week moving average and the 10-week cross back above again, so started to form stage 1, but then we had a continuation breakdown. So you don't necessarily always have to go from stage 4 immediately into stage 1 or back, or sometimes you can flip between the stages. You can have quick shakeout moves. So the fact that this, just because it went to stage 1 doesn't mean it has to go to stage 2. So you can just make a continuation breakdown and fall over once more if that structure fails. So, which, as we can see, it did. So what's interesting about this one this week was on Friday, there was a huge volume move. It's attempted over the last 3 weeks to form a base here. So you can see we had this W bottom type pattern that's formed down here. So potentially, if it can break back up through this 104 type area, could well obviously start to move back up to test that 30-week moving average. It's got a lot of overhead resistance. Is very, very deep in stage 4, but it is attempting to base here. We look at the daily, you can see that huge volume. It might be rebalancing, but obviously we've had rebalancing at other points, so it's a very, very large amount of volume there. So it's unclear what caused that. And then gold, on the final one for the commodity ones we're looking at. So this is the continuous contract chart. You can see that this, after breaking, if I go back, take it back a few more years here, you can see the longer term here. So we had this big stage 2 advance back through 2019 into 2020. It pulled off into stage 3 and broke down into stage 4 briefly, hit that trend line. You can see this long-term trend line acted as support, broke out of its downtrend channel. So we had a change of behavior in here. So potentially started to move back up into stage 1 again. So at this point in here, so this was our change of behavior area as it broke back up again. Big significant reversal bar within that stage 1 base. It started to base for many months, had a stage 2 breakout attempt which failed, and is now this stage 2 breakout attempt back up. This is the stage 2 area here, then failed and rolled over. So was in stage 2, wrong one. Was in stage 2 for a couple of months before rolling over and didn't make much progress. But look, interestingly, that long-term trend line, which acted as obviously support back here when it came back in 2021 multiple times before breaking down into the structure, also acted as resistance on the upside. So see a good long-term trend line. And we've had a lower high form, and it's attempting to a little double bottom pattern at the moment, so it could be forming a little structure within here. So at the moment, is this a bigger stage 3 top, this whole pattern where we've had this move from stage 2 to 3 into 4 back into 1 and then 2 and then, so are we in a bigger massive stage 3 pattern overall that encompasses all of this, or has this just fallen back into stage 1 after this failed upthrust attempt to move out into stage 2 early, and could it move back up again back into stage 2, or will we see a break to the downside? So nothing's clear at the moment. When you're in stage 1 or stage 3, you're going sideways, you're consolidating, so which way it breaks will give us further clues. If it can break this lower level here back down here, then potentially could move off into stage 4 again. But we can start breaking back above the original stage 2 breakout level, back above this 1900 level and a little bit more. You can see the RS is still outperforming the S&P 500 since February time, so it potentially could move back to the upside again if that relative strength remains strong. But if that starts breaking back down again, as I said, we could move off into stage 4 there. So at the moment, a little bit indecisive on what's going on gold there, and in the short term, obviously just consolidating. The VIX had a strong reversal move on Friday, continues to make lower highs here, so it has been coming off while the market continues to make lower lows, so still got a little bit of divergent behavior going on here versus what's going on in stocks. So obviously it's moving in line with stocks there, which it should be doing the inverse, so showing that volatility is decreasing a little, but we still need to get back down into below this 200-day moving average here and into this lower zone once more in order to be in a lower volatility environment and more favourable for long on the long side for stocks. So at the moment, still a difficult environment from the VIX.